How's it going, everybody? It is Dennis, and we're back with another video. And of course, it's the end of the month of October, the beginning of November already. And we're talking about how much we've earned for the month of October, as we usually do at the end of every single month. We discuss how much we earned from dividends and how much we've earned from options for October or for every single month. And of course, we're going to go ahead and start off, just get straight into it. As always, OHI, STHG, and MAIN have not paid us dividends because they're no longer in a portfolio. So I'm going to probably stop updating that in the new year because that won't be on the chart. But just to make sure that everybody knows, OHI, STHG, and MAIN are no longer in portfolios, so they have not paying dividends. And let's go ahead and get straight into YieldMax ETFs because that's where all the interesting stuff is. So looking at YieldMax ETF, we have this chart. This is the chart I used to use before they went weekly. But now that they went weekly, I still try and use this chart to the best I can. But of course, we have the weekly chart now as well. So looking at the week, how much we got paid from every single YieldMax ETF that I have. Firstly is TSLY. And TSLY, I ended off at 540 shares around there in the end of October. I earned $1.2738, and this is because they switched over to weeklies in October. So we had this huge influx because they paid their monthly and their weekly payments. So $1.2738 is how much I made from TSLY, or $657.90. If we take a look at the breakdown of the week-to-week basis, we can see that on week one, we got the 80 cent payment from TSLY on our 506 shares that we had, and that was $405.98. So they came in strong with that last monthly payment from TSLY, and then they gave us some strong payments on the weekly, right? So we got week 2 we skipped, and then we had the announcement over to weekly around week 2. So then for the weekly for week 3, 4, and 5, we had 529 shares, 535 shares, and 540 shares of what we ended off as. And we got a distribution of 1938, 1652, and 1128, earning us $102.56, $88.42, and $60.94. So you can see the amount we got distributed went down and down, but of course it's on a week-to-week basis now, so you're going to have some volatility. And as you see already, for the first week of November, we have 1470, so it's trending back up on the distribution. But focusing in on October, we ended it off with $657.90 earned, and that's thanks, of course, to the huge payment that we had on week 1 of October due to the monthly payment we got distributed from TSLY. Looking at the year basis, we've made $2,867.78 from TSLY. We've earned $5.9369 distribution per share, and we, of course, we're sitting currently at 540.2143 shares. So $2,867.78 earned so far, and we have 2 months left to go. So it's going to be very interesting to see how they pay out, as well as possibly getting high distributions in December due to the need for them to pay out all income they've earned for tax purposes. So it's going to be very interesting to see where we left off. If we compare this to last year of 2024, we made $4,305.10. So if we're going to come in around the same mark, I don't know. I don't think we'll come around the same mark. We might come in lower. And that is, of course, because we're not investing 100% of our investments or dividends back in. We're only reinvesting 50% back in. So it would make sense why distributions fall or stay the same. In theory, they should rise, but as we saw with TSLY's performance, has been quite poor over the years. So it's to be expected, at least from TSLY. Now let's move on to AMZY. With AMZY, we ended off with 408.5 shares. We earned a total of $55.15 per share and $222.34. If we take a look at the weekly breakdown, we could see that week 1, week 2, we had no payments because there was supposed to be a monthly payment, but then they switched over to weekly. In week 3, we had 397.5 shares, which earned us $25.50 distribution per share, or $101.36. Then we went up to 407 shares, and we got $9.59 as a distribution, or $0.959, or $39.03. And in week 5, we ended off at 408.5 shares, and we earned $20.06, or $81.95. As you can see, for the next week of November, we already have our numbers in. 411 shares, $29.39. But once again, focusing in on October, we earned a total of $222.34. And on the year, we've earned $2,111.74. A total distribution of $5.9791, and we're sitting at 408.5 shares. Of course, this lower number hasn't updated. If we take a look at the previous year, we're about to beat the previous year return of $2,176.87, and that is because we did take a pause From January to May, we had a pause in shares. If we actually continued those increase in shares, we would have been beating last year's numbers for a long time already. But due to that pause in shares, we are just getting to beating the distributions from last year just now. So November, December, once we get this distributions in, we should definitely be beating last year's numbers. And as you can see, that is what happens when you have a good performing ETF or underlying. And also, when you reinvest back into the ETF, this is how technically it should function. If distributions stay the same, if they rise, stay the same, and the value as well rises or stays the same due to a good performing underlying, which is Amazon in this case. Moving on to Aptly, we have Aptly sitting at 303 shares. We have not been adding shares into Aptly for a while now, and we'll probably continue to not add any shares back into it because it continues to pay a good amount, and that amount is good enough for me. So we earned $41.85 per share, or $126.84. If we look at the breakdown, we could see week 1, week 2, nothing. And then week 3, we had the 303 shares, so all the shares stayed the same from week 3 to week 5. We had a 1760 distribution, 1112 distribution, and 1313 distribution, earning us 53.34, 33.70, and 39.80. And you can see the November numbers are already in, earning us 33.58. So far for the year, we earned $1,227.56. We got a total distribution of $4.570577. If we take a look at last year, we're at $7.98 last year, $7.9882. So we are definitely beating last year's numbers already without any addition of shares besides January to February. So as you can see, no addition of shares, and we're beating the numbers that we got last year. So here is another good example. You do not always need to add shares back in, and you can still beat numbers from last year. As you can see, last year we're sitting at 271, 243, 213 shares, right? Obviously, we do have a higher share count than we had before, so that's also to be calculated into there for that bias, right? We started off with 112 in 2024, ended at 271, and then here we were sitting at 303 the whole time. So the amount of shares was higher for majority of the year, so that's also to be calculated for, but still we were able to get a higher distribution even while sitting at the same share value. And that's because Aptly has been a good performer when it comes to keeping its distribution solid and steady, which is one thing that I always say, and I always want from an ETF is to have steady dividends that they're able to come in steady, and I'm able to know what I'm going to receive every single week or every single month, and I know exactly how I'll use those dividends to either reinvest or play with other strategies or any other way I want to use them, like for bills or anything of that sorts. So, pretty good ETF Aptly. I probably should invest more into Aptly, knowing that it's solid and it's distributing quite consistently and stable. But of course, I currently don't see a future in Aptly that much, and also the distribution percentage is quite low. So then that would drop the average distribution of my portfolio annual return, annual percent return. If I was to invest in Aptly, because Aptly's distribution per share is lower than all my other ETFs I have in my portfolio, and I want to try and keep my distributions or my annual percent return around the 40 to 50% mark with dividends at least. So yeah, Aptly would lower that. So it would be a great thing for my portfolio. GUI is another one that we have been keeping shares steady since January to February. We've been keeping these shares steady at 334. And GUI was another one that paid a lot because it paid the same as TSLY, paying its monthly dividend of $69.35 on the 334 shares, or almost 335 technically, if you round up. We got $232.32, and then we got 3 distributions, of course: $16.35, $20.96, $13.83. We got $54.77, $70.22, and $46.33, giving us a total of $403.64. And of course, November numbers for week 1 are in as well, and you can see that the distribution trended upwards for the first week of November. So $403.64 earned. Total earned is $1,611.37. Total distribution per share is 4.82. Compared that to 2024, where we got $967.13. Another one that's beat itself without the need to add more shares. And of course, that is because, like I mentioned before with Aptly, the share count we started off before was 60, and it took us a while to get up to a higher share count. So that also contributes to the fact of why we're beating last year's returns. And we still have 2 more years left, 2 more months left. So we might even get above the $2,000 mark with GUI, which will be very interesting and nice to see. But once again, another position that I'm not looking to add currently because the percent annual return is low, and therefore it will lower my average percent return on my portfolio in general. So that's something I'm looking to invest into currently. Moving over to another one, AMD. AMD is another one that's actually done pretty well. You can see 244 shares sitting consistently. Paid us $1.3723 or $334.84. If we take a look at the breakdown for AMD, week 3, week 4, week 5, shares stayed the same, obviously. We got 95.02 paid on week 3, and I'm pretty sure they paid the monthly amount for week 3 because that was supposed to be the AMD payment anyways. And then they paid us 19 and 23.21, earning us $231.85, $46.36, and $56.63. And as you can see, the distribution for week 1 comes in low at 12.07, going back to AMD's usual distributions, always low and kind of lackluster. But hopefully they're able to keep it up. It would be quite nice to see, because if we take a look at previous distributions, right, these are monthly distributions of 54.41, 24.41. If we're able to get 3 more of 12.07, that'll put us around the 48 cent mark. So it'll be close to August and July, and beating June and September. So it'll be pretty decent to see, especially for the value that AMD currently is when it comes to share value. So we'll see how it works out. Plus, you have weekly reinvestments if you do decide to reinvest into AMD or any other position you have. So that will probably help you out as well. So $334.84, $1.3723 is what you've earned, or what I've earned in distributions, or whoever else was invested into AMDY. And our total is $1,251.34. Total distributed is $5.2002. As you can see, it's our highest payment ever. We actually are beating, of course, 2024, but 2024 we weren't fully invested for the whole year, so that's to be expected. But that is the highest payment we've ever earned, and that's thanks to, of course, to the monthly payment and then the weekly payments we receive. So $334.84 is currently the highest we've made from AMDY. Finally, the last one on the list is YMAX and WOW. Was YMAX a strong pair? So let's go ahead and take a look at YMAX. So week to week for YMAX, of course, it was a 5-week payments for October. There was 5 weeks of payments that we received. So just remember that is a bias to be considered for. So looking at week 1, we started off 958 shares, 958.5, right? We got $13.99 distribution. That made us $134.10. That was a 70.94% increase from the week prior. Then we got week 2, 963.5 shares. We made $14.70 per share, or $141.64, and that's a 5.62% increase. Week 3 came in at 969 shares owned, a 17.43 distribution, $168.90 earned, right, or a 19.25% increase. Then week 4, we finally made it to 1,000 shares. We made it to 1,000 shares, and you might be asking, how did I get to 1,000 shares from 969 to 1,029? I was able to do a trade on, of course, my S&P position, right? I did my S&P position trade, and therefore I was able to get income from that and purchase up to 1,000 plus shares in YMAX. And also, I took some of my distributions from that huge TSLY payment, that huge GUI payment, and all those distributions from that the third week, the first weekly payments from YieldMax, and I put it into YMAX, and that got us to 1,029.1598. All right, 1573 was the distribution. $161.94 is what we earned, and that was our only red for this month at negative 4.12%, and that's because the distribution came in at 1573, which is quite surprising because I thought the addition of shares would actually make up for it, but it unfortunately did not. Then we went up to 1,036 shares, and 1939 was the last distribution for week 5 of October, and that earned us $200.88, or 24.05% increase, and that ended us for the month at $807.45 earned. $807.45 earned. That's an 88.65% increase from the month prior, where we earned, what was it, $428.02. So as you can see, YMAX actually did really, really well compared to its previous months, and also we did add a couple shares into it, so that's to be expected. But $807.45 earned, and to be mentioned, actually, that it seems like this change to weekly with all the single stock ETFs is actually helping YMAX when it comes to consistency. It's too early to tell, but as you can see, for week 1 of November, we're getting 17 cents once again. And as you saw previously, we were getting 10, 13, 12, 8 cents, 13, 11, 14 cents, right? 13, 10, 15, 16 cents. We got those occasional 18, that occasional 16, but in general, everything was 15 cents and under. And now we're getting 17, 19, 15, 17, right? We got these two low payments, but this is before it went weekly, right? 13, 14. And once we went to weekly, then we have 17, 15, 19, 17. So it's too early to tell how it's going to turn out. It's too early to say that this switch to single stock ETFs paying weekly is good, but what I'm noticing from YMAX is that there is a possibility that YMAX will possibly benefit, and of course YMAG as well will possibly benefit from these weekly payments from single stock ETFs, because you're no longer waiting for certain groups to pay out, which will do better than other groups because they maybe have better returns or better annual or better premiums that week or better premiums that month or anything of that sort, right? So especially YMAG, where you have one week where only MSFO is paying you, right? So it's going to be very interesting to see how that plays out, and I think it might truly be a benefit to YMAX. So I would love to see how much people transition over to YMAX and change their opinions on YMAX, because YMAX is doing pretty well. It's doing really, really well. Besides, of course, the value loss that it's recently been experiencing, but hey, what can you do? Just the underlyings that it has with the single stock ETFs have been doing poor or poorly. So the total, as you can see from YieldMax alone, the total we've earned is $2,553.02. That's a 111.9% increase from the month prior. That is our highest distribution, I'm pretty sure, ever. Yes, it's our highest distribution ever from YieldMax ETFs. Of course, it's a 5-week bias. We had a switch to weekly. We had 2 monthly payments from TSLY and GUI, and we had a switch to weekly. So that's to be noted. But it is nice to see that the fact that we earned $2,553.02 just from YieldMax ETFs alone. And that, of course, leaves us with YMAX being $4,874.42 total earned. $6.6167 is our distribution per share. And if you compare that to last year, of course, $1,571 earned from YMAX last year. So YMAX this year is doing really, really well. We have 2 weeks left as well. So it will be very interesting to see if maybe we could even hit $6,000 earned from YMAX alone. And of course, this makes up a big portion of my portfolio, roughly 13 to 14% of my portfolio. So it makes sense to why it's yielding so high compared to the other ETFs that are like 4 to 5% of my portfolio. So anyways, very nice to see from YieldMax ETF, and of course that translates to our main right here, where we can see all our distributions, and we can see 126, 657, 222, 403, 334, and 807 from YMAX. HTGC we did not sell out of, but it just didn't pay yet, so that one is not being calculated. The AFC we sold out of, DHS we sold out of, SCHH we sold out of. RITM paid us $61.85. This is a quarterly paying ETF that paid us $61.85, and then of course we have QDTE. Looking at the breakdown for QDTE for October, once again, 5-week bias for these weekly paying ETFs. We ended off at 405 shares, or 405.7 shares. We started at 375.2 shares, right? We earned 2071, 2041, 2042, 1982, and then 2358. We made $77.70, $82.09, $82.37, $80.19, and then $95.66. They gave us a total of $418.03 earned from dividends from QDTE. This is once again why I love QDTE so much. It is stable, it's consistent, and it continues to pay 20, 20, 20. We got that 19, but then we got the 2358, which made up for that low week of 4, meaning compounding is stable, distributions are stable. I know what I'm going to get. I know where I'm going to put my money. I know how much I'm going to get, and if I'm able to sustain a certain kind of reinvestment, a certain kind of lifestyle, if you're retired and using this for money or income-wise. So very nice to see. And of course, we got 4 weeks of green, 1 of red, similar to how YMAX performed. We had a 1.99% increase from week over week for week 1. We had a 5.64% increase, 0.35% increase. We had a negative 2.65, and then we had a positive 19.29% increase with that 2358 distribution. And as you can see, the shares are consistently being added and growing. Of course, we had week 1 to week 2, we had an increase, and that's because I added some shares on my own. I had cash to throw in, and therefore I did. And from month over month, we're up 30.65%. And of course, November numbers are in again, coming at 20 shares. I mean, so 20 cents per share. So quite nice to see from that. And if we take a look, of course, last month we made $319.96, and of course that was a 4-week. Then we made $302 the week prior, but the last 5-week we made $377.77. But we also had less shares that month of July. So of course that's once again under the bias to take note of. But still, we made more than the last 5-week payment cycle that we had. So very nice to see from Roundhill ETF. Now going back to the main sheet, we have JEPQ, which paid us $31.67. This is one of my main positions in my portfolio, as well as SPYI, right? So SPYI, JEPQ per QQQ, and as well as not distribution, as well as why am I forgetting the word? As well as not diversion. I'm forgetting the word. I don't know why. It's on the top of my head. I know it. But JEPQ is my play on QQQ, as well as holding diversifying. Sorry, there's the word. I don't know why I couldn't say it. My diversification into JP Morgan, right? And then SPYI is my play on S&P, my long play on S&P, and as I'm diversifying into NEO's ETFs, right? And we can see JEPQ already announced how much they're paying and already paid for, of course, November, $34.02. So it's continuing to increase month over month, which is nice to see. And that's the same thing with SPYI. BTCI paid us $12.59. And of course, MAGY paid us $123.42. MAGY, let's go ahead and take a look at that. MAGY, let's go ahead and scroll over to it. MAGY had 4 weeks technically of payment, not 5, because they pays on Mondays, and there was only 4 Mondays for the month of October. So week 1 we had 70 shares, and week 4 we had 91 shares. So week 1, 70 shares, $38.66 distribution, $27.11 earned. Week 2, 79.1208 shares and $37.63 distribution, $29.77. Then we had 88.02 shares for week 3, $37.61 distribution, $33.10 earned. And then week 4 was 91.02 shares, $36.73 distribution, $33.43 earned. As you can see, MAGY is another one that pays consistently from Roundhill ETFs. Is there variations in it? Yes, 38 to 37 to 36. But it pays consistently around that range, and therefore that's why I love it. Compared to, of course, let's look at the last week 4, which paid also $1.52. If we look at the last week 4 to that, also $1.51. So we can see it pays consistently on a 4-week schedule at $1.50, and on a 5-week schedule we got $1.89. So, and if you look at the week over week, look at this. It's just greens, week over week, greens, month over month. And that is also because I am adding shares into it from other ETFs, and also adding reinvestments back into itself. But as you can see, 6.37% week over week, 9.83% week over week, 11.19% week over week, 0.99% week over week, and a month over month of 3.05%. And we got the numbers in for the first week of November. We also have the numbers in for the second week of November, but I just haven't inputted the numbers for that just yet. And we got $37.25, another stable distribution of $35.71, and it continues to increase, which is very nice to see from MAGY. And we see that coming in at $123.42, continuing to increase month over month. We also have ULTI. ULTI has been performing kind of weird. The value has gone down a lot. And as you may or may not know, this is a way for me to use some of my Robinhood Gold income and put it into ULTI, or my Robinhood Gold points, and I put it into ULTI and see what it's going to do. So currently we started at 34 shares. We went up to 42 shares. And we got distributions of 99998. And actually this week we had a low distribution for November. I just haven't inputted those numbers once again. But we had $3.12, $3.32, $3.48, $3.70, and $3.62. And that's 4 weeks of green, 1 week of red. And that's similar to what we saw in QDTE and YMAX. Is just the weeks were different to each other. So 3.84% increase, 6.45% increase, 4.86% increase, and the 6.38% increase week over week, and then negative 2.14% to end off the month. And now it's a month over month increase of 50.87. But once again, I'm adding shares or money into it using taking from my Robinhood credits that I receive for using it on a day-to-day basis, and I throw it into ULTI, which is why there's that bias to be considered as well. And when we look at the main sheet, that earned us $17.25. We also have YBTC. I forgot to put in YBTC because I don't really track it that much. YBTC is kind of just my, like, you know, I have like 0.5% of my portfolio in YBTC. It's not a huge position. It's also been performing quite poorly, just because, Bitcoin also has been performing quite poorly, so it's to be expected. And BTCI as well has lost the value. But BTCI is a little bit more stable than YBTC. YBTC also lost value and lost distributions per share. But that's usually just how these ETFs work, right? Because a 50% return on $50 is different than a 50% return on $40. So YBTC went down in value, also didn't pay that much in dividends, so it doesn't really matter if I do have this or do not have it. Of course, it'll be updated for the next month's update, where it's probably going to be around like the $5 mark, or even maybe probably, it'll be around the $5 mark with distributions, because I think I got two $2 and then three $1, so it's going to be $5-6 mark for YBTC, but it doesn't really put a dent in the portfolio, so it's not that much of concern. So looking at how much we made for the total of October for dividends, it's $3,278.20. $3,278.20, or an 86.16% increase from month over month. And of course, 5 weeks of distributions. We had a huge change in YieldMax ETFs. So that is to be noted. This is not what we're usually gonna get. In my estimate, next month we're probably gonna go back to our usual track record of slowly growing upwards, but it's probably gonna be 2,000-ish if I'm being if I'm speculating on how much I'm gonna return for next month for November. It's probably gonna be $2,000-ish for next month for total returns on dividends. So this $3,278.20 is huge, but don't expect this to be every single month on my portfolio, because this is just due to all the changes that YieldMax had, to the 5 weeks of distributions that we had, and that's why we had this huge distribution and payment for October. So November is probably going to go back to probably 2,000, maybe high 1900s. You can see that we're slowly trending upwards with dividends, right? So we started off the dividend journey for this year at 1340. We went to 1450, 1358, 1456, then to 2000. That was 5 weeks. Then 1609, we had another 5 weeks of 2,285. Then 1801, 1761, we had this 3,000. Then the next one's probably going to be like $19 to $2,000 in distributions. But we're slowly trending up, which is what is important to me currently, because I'm trying to get that dividend distributions steadily growing faster and faster, because compounding grows faster and faster every single month, every single week. When you're making more, you're able to reinvest more and therefore grow more and faster and therefore earn more, and so on and so on and so on. Compounding is great for that case scenario. So we have 2 more months. I expect November to be 2,000-ish in dividends. December is depending on how much they decide to pay us for tax purposes. How much they decide to pay it out. That one might be 3,000 once again, maybe less. Depends on how they play it out or what happens. But 2,000 for November definitely, or high 1900s, and then December is probably going to be around like 225 to maybe 3,000. We'll have to see for that one. But we're not done just yet. We also have our option income, and for option income, we earned $996 on option income on our S&P trade. As you can see, we already have our numbers in for November as well. That earned us $1,041. So that's very nice to see. S&P is continuing to go up. Of course, it did dip as of recording this video on Thursday, November 6th. The S&P has been dipping for 2-3 days. So that's due to economic data such as jobs data, and just, people kind of being iffy on if are we in a bubble, are we not in a bubble, how's the economy doing, how are jobs doing, blah, 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 blah. But in general, we know S&P always trends upwards. Even after downturns, it will continue to go up because of just the general market. So $996 earned for the month of October from options, and that's a 21.46% increase month over month. And of course, that's higher than our target. Our target is usually $800 or $400 per contract. We have 2 contracts, so $800 is our total that we usually aim for, and we made more than that, right? We made $996, and from next month we made $1,041. So we're higher than what our target is, which is very nice to see. And we ended off the month making $4,274.20, a 65.6% increase from month over month. And I think that's our highest distribution or income earned for the month ever. Yeah, I think we've made $3,000, right? For this year, we made $3,000. Let's look at last year. Last year, yeah, our highest last year was 3,475. Yeah, 3,475 was our highest last year, and this is our new high for this year, earning 4,000, or for forever, earning $4,274.20. Yeah, it's impressive. You know, I can't lie and say it's not. It's quite nice to see that, you know, you're able to earn this much. But also don't forget, all these numbers are not true income, right? Sure, if I decided to take this out in cash, I could, but I didn't. All of it was reinvested back in. 50% of TSLY, 50% of YMAX, 50% of QDTE, and 50% of AMZY, and 50% of MAGY goes back into itself. The other 50% gets invested into wherever I choose to do so. MAGY, PLTY, GUI, and AMZY, all 100% of its distributions get reinvested into wherever I decide to do so. So none of this money is getting taken out of the portfolio. All of it is staying in the portfolio and being used for reinvestment purposes. Am I technically losing on some of them due to value loss on distributions, right? When the distributions come out, you lose value. And also there's NAV erosion on these ETFs because that's just how they function. Yes, I am. But the distributions outpace it, and I am constantly looking on a month-to-month scale, looking at how each ETF is performing, how AMZY is performing, how PLTY is performing. All these ETFs, I'm looking at how they're performing, what their distributions are they going higher? Are there any new plays that are out there? One of my new positions that I opened up was COSW for the Costco Roundhill ETF that they launched, weekly pay Roundhill ETF for Costco that Roundhill made. That's a new position I've opened up. That's only 3 shares. It's not that great of a position. You probably won't see it on the portfolio for a while until I grow it a little bit more. That's just because it's paying like cents. It's like paying 20 cents, 30 cents, something crazy. But that's a new position I opened up just because I am bullish on Costco, because I think Costco is a great play for the long term. It has it just makes sense, right? It's very good when it comes to if you know, we're going to a bear market. Costco is a great play because everybody always needs groceries, and buying a large amount of groceries is great because, you know, it's cheaper, and that's what people usually go for, and plus they have their membership and everything like that. So, you know, COSW is something I purchased recently. I've also been diversifying into actual ETFs and stocks. So TSLY, I've been using some of the distributions from TSLY to buy TSLY. That's because I'm trying to find more growth opportunities, and I think Tesla currently is a great opportunity to purchase just because they are having well, they actually had, as of recording this video, they had their meeting for shareholders, and Elon was approved for his pay package if he was able to reach certain criterias in the company. So I think it's a great opportunity to invest. So that's why I'm starting to diversify into positions like that. So purchasing Tesla with TSLY dividends and everything of that sorts, and also purchasing MAGS, which is MAGY's underlying. I'm buying MAGS, which is the MAG 7 ETF from Roundhill. I'm actually purchasing that as well, and I'm growing that as well. So you won't be seeing that in this portfolio because this portfolio tracks dividends and options. But that is being purchased in the portfolio to hold to hold more value, to keep the value in the portfolio stable, and also provide growth. Because distributions and do provide growth, you know, because as we could see, that's the value of the account is growing, the distribution amount is growing, but of course you want something that's a little bit more stable and is not constantly decaying. There are ETFs for that, like SPYI, BTCI, but they yield 12% for SPYI, 30% for BTCI, but they also don't go up that much as you would want them to. So I'm shifting more into a focus of distributions, which is, you know, I'm continuing to reinvest into dividends, but I'm slowly moving some money into actual growth. Because you want to grow your portfolio as well, especially if you're a margin investor. You want to have growth in the portfolio, and so you're not just focused on dividends every single week in case there's some market issues and you don't get a margin call, and blah, 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 blah. So that's just how the account is looking. You guys are going to see the account at the end of the year, because that's what I usually do. I do a portfolio overview at the end of the year to see what the value of it is, how it's been performing, what is the total return of the account in value, and yeah, just overall the account value, where it sits in all my positions. And that'll be coming at the end of the year, as it usually does, like we did for 2024. I'll do another one, as always, for 2025 and be super transparent with you guys, show you the whole portfolio. But yep, that's how the portfolio is sitting as of November, or as of end of October. We made $4,274.20. Most of it was all of it was reinvested back in. Not all of it was reinvested into dividend ETFs this time around. It's being reinvested now to actual equities and shares of companies that are growing, or hopefully will grow, like I said, Tesla, MAGS, and so on. So it'll be very interesting to see how this portfolio does. Like I said, this portfolio is like an experiment for me. It is obviously it is a big portfolio, and it's this channel's for a way for me to show how I'm managing my portfolio, what I'm learning, right? The whole point of this channel is to demonstrate what I'm learning. This is not to give financial advice. None of this has ever been, but it's just to demonstrate what I'm learning, how I'm playing the market, and what am I choosing to be invested into, and how am I shifting my opinions, right? We started off this channel being like, the channel started off being like a credit card thing, right? Like, hey, like, get this credit card, blah, 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 and so on. If you go back to the original videos, like, it was credit card stuff and stuff like that. And then it shifted to like dividends, and it was like saved dividends, right? It was like Coca-Cola and RITM and HTGC and EFC and all these ETFs that paid like, 8 to 12%, which is a good dividend. Don't get me wrong. 8 to 12% is good. Especially if it's stable and keeps value and grows. And then we started shifting into YieldMax. We went into YieldMax, and we started trading options. We did TNA. We did, at some point, what else did we do? I forgot. We did Riot. We did MARA. We did NVDS. We did TSLY. We did TNA, right? So we were doing all these option plays. We were learning. We were losing money, right? I've made it clear many times that I was down on TNA for a while, and I literally came out of it with the profits we made from calls, and then the value loss. We came out of TNA like maybe barely really making much. It was like a $2,000, $3,000 profit on a huge position. So, but it was a learning experience. I learned a lot from that. I learned that you don't want to over leverage and overplay on a 3 times leverage ETF. Don't do that. And when we had the crash due to tariffs, that really showed me a lot. So yeah, I don't know, that's pretty much the portfolio, and that's what I'm doing with this channel. I just wanted to go on a little rant here at the end and explain what this channel is for, and why we're showing all these numbers, and why this is important, because this is a way not only for me to show what I'm doing, but for me to also kind of maybe educate somebody on finance and the use case of investment, and what mistakes to make and what not to make. Because you could, like I said before, you could go down my channel's history and see how we've changed this portfolio, and see what mistakes we've made. We've been in positions before that were like, not the greatest, right? Like, look at these all positions that we had before. We had Coney, we had MSFO. Where's that? We had MSFO at one point. I don't know where it is. I don't know if I deleted it, but we had MSFO, we had SPHD, we had DGRW, DHS, SDHH, TSLL, right? By the way, like DGRW and like DHS are great ETFs to have. Don't get me wrong. If you're like a long-term, super safe investor. But we had a bunch of different ETFs, a bunch of different stocks at some point. So yeah. A lot of things we've learned along the ways, and this is what this channel's for. And I hope you guys enjoy this content, and I hope you guys continue to watch it, because it's a learning experience for me. I feel like it could be a learning experience for many others, and yeah, that's pretty much it. So let me stop going on my little rant, and just thank you guys for watching. Thank you guys for subscribing, liking, and constantly being on this channel. I see that people are coming back. My usual viewers are coming back, commenting, leaving comments, likes. I see all that data, right, on who's coming back, if it's new viewers, old viewers, and I love seeing that there's viewers that are consistently coming back and watching these videos, and hopefully enjoying these videos. So Anyways, thank you so much for watching. I will see you guys next week for next week's video. And see ya.